What's up, everyone, and welcome back to the Blockchain Almanac Weekly Crypto Report, where we educate, protect, and empower all investors in the blockchain space. And remember, blockchain is much more than just crypto, but it's important to keep an eye on what's happening in these markets. And that's what we're here for, to make sure you remove all the hype and have a data-driven approach. Now, there have been a number of interesting developments over the last few weeks, so let's get you caught up with the latest headlines. Bitcoin prices flirted with the $8,000 mark. Now, major political tension with Iran had some impact, and now that it looks like that war may be avoided, the prices pulled back a bit, but this contributed to an overall rise in the number of Google, Twitter, and other social sentiment indicators. And when we look at the on-chain activity of Bitcoin and other major blockchain networks, there's been a rise in daily trading volumes over the last months that also point to a more overall interest and potential for price movement. And make sure to pay attention to hash rates as we get closer to the halving event. China announces plans to launch state-run blockchain network. Now, China's nationwide blockchain network, known as the Blockchain-Based Service Network, or BSN, will launch in April of this year, 6 months after it rolled out for testing. BSN is a joint initiative with China's state policy think tank, SIC, and state-run companies. The ambitious project aims to provide a trusted and scalable infrastructure for supporting new blockchain projects, as well as the development of smart cities and a digital economy. Inactive coins. So the data shows 10.7 million Bitcoins haven't moved in more than 12 months, and that's according to Digital Assets Data, a fintech company building crypto data feeds. Now, considering the total number of Bitcoins in circulation is over 18 million, this means nearly 60% of the coins remain dormant and only 40% participated in a price action in 2019. And it's interesting to see, considering 40% of the Bitcoin supply is being held by around 2,000 Bitcoin wallet addresses. And the percentage of Bitcoins lying dormant over a year is at its highest level since 2017. Another big headline that may have sneaked under the radar this week was Tether's announcement that it conducted a cross-chain swap of some 15 million USDT reserves from Ethereum to blockchain's Liquid, a sidechain-based settlement network for traders and exchanges that enables faster, more confidential Bitcoin transactions that also allows users to issue their own assets. Now, Tether's decision to issue 15 million to Blockstream's private settlement network has implications for both digital asset trading and larger Tether markets. The stablecoin giant had previously moved funds from Omni, a Bitcoin-based protocol, to Ethereum and even Tron over the course of 2019. But moving funds to the Liquid network, which offers greater privacy, will certainly be met with enthusiasm by traders that use Tether as a tool to help move large amounts of digital currency. The currency has gained a following as a vehicle for price volatility protection, and it's likely that more USDT will be minted on Liquid given the advantages. Now that we've seen the top headlines, let's take a look at what the crypto markets did over the last few weeks. But remember, blockchain is much more than just Bitcoin and cryptocurrencies, and we publish these weekly crypto market reports because at the moment, the main use for blockchain-based assets is as a speculative tool. So it's really important that we keep track of what's happening in these markets to give us a clearer view of the overall blockchain landscape. The Blockchain Benchmark Index is a comprehensive metric that is designed to make it easier to track not only what's happening in the crypto markets, but also what's happening across every relevant sector of the space. Now, over the last 30 days, the blockchain benchmark was positive 2.85%, with a pretty up and down December, but rallying to start the new year. Bitcoin led the way, up 4.7%, while Ether and Ripple are both in the red. Now, for the small cap index, it had a tougher time, down 3.85%. And over the last 12 months, the large cap BCA index is up 56.51%, the mid cap index is up 11.76%, while the S&P is up about 31.49%, and gold up 20%. So that's our weekly report. Thank you so much for joining us. And remember, despite past performance, no one knows what's going to happen in the future. There's a lot of optimism out there, but be cautious. This is a risky asset class. Past performance is not indicative of future success. Crypto is risky. And at the Blockchain Almanac, we're cynical optimists when it comes to both blockchain and cryptocurrencies, but we're here to help you track the markets responsibly and with a cautious optimism. So if you like this video, make sure you subscribe to our page You check out our website at blockchainalmanac.com, and make sure you come back next week for the latest trends and headlines happening in blockchain and cryptocurrency.